life, your term show.
Okay, we are live with Anthony Molinaro and Aidan Karadza.
We're here.
All right, Aidan, you okay with the mic?
Yeah, I think so.
Just snapped it in.
Okay, so what's happening with the real estate market? Am I asking you or are you asking me?
I don't know if I'm the right guy to answer that. I think it'd be better if I asked you that. What is going on with the real estate market? Like it's obviously we're going through credit cycle. We had the biggest credit loosening cycle of all time through COVID, then the biggest credit tightening cycle of all time, at least in my lifetime. And now we're in this weird thing where it's just continuing, even though rates have been cut in Canada, rates are now being cut all around the world really, and have been for a while. And now the Fed is finally starting to cut rates as well. And so it's like, how many cuts is it going to take to change the credit cycle here where real estate's going to start moving again? Is it just psychology's been impacted for Canadian homeowners and investors? Is it that the Fed hasn't started cutting yet and really like they're the underpinning of the whole system and like them cutting matters more than us cutting up here in Canada? Like what's kind of going on with it?
If we use the 1990s to kind of make sense of what's happening right now, during the 1990s, things went bad and ground bad for 6 years. Real estate activity responded in about 18 months. So in 1990, there was like a big collapse in the real estate market. Interest rates went up like 3% in 1 month. And the real estate market basically collapsed immediately. And property prices ground lower for 6 years. But activity came back after about 18 months because some people just needed to sell. Like it wasn't a choice. You were like, holy crap. And maybe we can talk about that starting to look like it's happening right now a little bit right in this area. But it went down for 6 years. And part of the reason it went down is people just kept saying in that time that, oh my gosh, things are going to get worse. Things are going to get worse. I might as well sell. I might not buy right now. You shouldn't buy right now. So you were fighting human psychology. And that's the biggest thing that's happening right now. If we look at what happened in the pandemic, like you said, things got really loose. And then they're like, holy shit, we can't let this go on forever. We might actually hyperinflate our currency, right? Inflation's rip roaring. We got to raise these rates. Like things are out of control. We need to save the system. We need to save our asses. Basically, central bankers saying to themselves, we need to save the system. Let's raise rates pretty quick here because things are out of control. And when you do that, the first thing affected and that is most sensitive to rates is real estate. Real estate grinds down like it has been. And then now, because it hasn't come up for it's been a year and a half, 2 years of this, everyone's liquid cash is drained. Nobody has money on a credit line that they used to have. If they have equity in the property, maybe they can't qualify because they recently lost their job. Employment hasn't been that great. So now you're fighting. And then even if you can qualify, or even if you can buy an investment property or a new family home, a lot of people are worried about their own employment. So they're like, hey guys, we don't really want to take action right now because, I'm a VP in finance at one of the companies in Canada and I don't know where my job is going to be. So I'm just going to hold. So now you're fighting, to your point, psychology. So things got really loose, then they got really tight. And even though they're loosening now, people's liquid cash is gone. And you're fighting the psychology of like, I don't know if this is the right time to act. So we need to fix psychology. And psychology requires much more stimulus than a quarter point or a half point. You can't fix, oh my gosh, I don't know if I should buy right now with a quarter point change in the mortgage market. You're going to need another half point from here, another 3/4 point from here to really kind of have the numbers look differently for people to think, okay, you know what? I think my credit line costs monthly right now are a little bit lower. I think I can make a decision to move. Like you're fighting this human psychology thing. They've cut rates like what Canada cut in September, that quarter point. And what did we just cut another quarter point? That's really, yeah. And then on top of all that, you have a bunch of people who bought in 2021, 2022. They got mortgages at some people we know got mortgages at like 1.99%.
I got 1.2 on a student rental.
I remember that era, 1.2. Yeah. So even though rates have come down, if you're somebody who bought a family home, never mind the student rental, but a family home at 1.2, and maybe you want to make a change, right? Things are changing. You want to sell. Well, maybe you're not going to sell because you don't know if you're going to get 1.2% again. So now you have a few years left at 1.2 and you're like, you know what?
People are still locked into that.
I'm just going to lock you. Yeah, I'll keep another 2 years at my 1.2. Let's let all this blow over. And then I'll make a decision. Maybe I'll move into the city, out of the city, up north, another province, whatever.
And in the States, it sounds almost more frozen because they have the 30-year fixed mortgages. So a bunch of people are refied during the COVID low interest rates. And they locked in for like 30 years. Yeah. So now their market's like sounds pretty frozen because it's just locked in. Why would you want to move and break that low rate?
Agreed. So now let's go over all the headwinds in Canada. You have interest rates that have come down a little bit, but not really enough. So interest rates need to come down more to change the real estate market. You have human psychology, where people are like, I don't really know if that, I'm kind of confused. Things don't look that cheap. If it's a sophisticated investor who has a lot of experience, they might look around at prices right now. And if they have liquid cash, okay. So there's some people, and we see some of those. We are taking action. I shouldn't say that no one's acting. We are seeing some people buy. But you have interest rates that haven't come down very much. You have human psychology. And then you just have people's liquidity, where everyone's just a little tighter. Mm-hmm. And then you have employment concerns. And then if you layer on top of it, what if someone looks at the whole Canadian economy, if they have that breadth of knowledge or they have the ability to kind of stand back and look at Canada as a whole and they're like, oh my gosh, I don't even know what's going on in Canada. Mm-hmm. Very few people I think are doing that. But you have all these headwinds. You have at least 3 or 4 or 5 headwinds.
Tariffs, changing, global,
that's the big
global
picture.
World order.
Yeah, that's the big picture.
Yeah.
So it's like everyone's just like, holy smokes, let's just kind of hold off here for a second.
And I guess what's interesting too, I just want to say is you'd think, I guess some people might think that real estate prices might already be moving because in an environment like a year that we're having where stocks have been absolutely ripping, so like risk on assets, and then you have gold ripping, you might think that real estate would be moving. But it seems like it's pretty stagnant. And I guess, is it just because it is more rate sensitive? Because a lot of those like liquidity and people's psychology would play in a little bit, I think, to the stock market and then gold as well. So you have these other assets like risk on and risk off ripping, while real estate seems for now to say stagnant.
Yeah, that's fair. Yeah. I just think that it's what you said. Real estate is rate sensitive, and things like gold, which actually ripped, are, the buyer behind a lot of that.
It's different
retail, but you have the central banks around the world who are looking at the big picture going, holy shit, I don't know who I can trust or what I can trust. And they're plowing into gold.
Yeah, it's for a different reason.
Different. Stock market, a little different. It's been ripping. So, yeah, I don't really have a good. Yeah, it is, but definitely real estate is interest rate sensitive.
Totally, and maybe a little bit more emotionally sensitive too.
Yeah, and I think the stock market's going to continue to attract people. It's easy to get in and out of. Real estate's a little bit more difficult, and when you live in a world where artificial intelligence is confusing employers, where people are like, "Hey, I'm not going to hire junior people." So I'm not taking on new hires that I may have taken off. I might start letting go people like we've seen, and people might like Accenture and Amazon. They might be using the excuse of AI right now to be letting go a whole bunch of kind of people that they wanted to. Who knows how true it is? There's definitely some truth there. But the stock market's going to look interesting, I think, for the next little while, because for the next few years, their profitability, I feel like, is going to go through the roof because their labor costs are going to go down.
Totally.
So the stock market's an interesting one. Like, I feel like, holy smokes, is this like, people are calling already like there's an AI bubble going on. And I'm like, I don't know. I feel like this has legs still. And then there'll be a bubble moment where things go way too high and a whole bunch of stuff comes crashing down. But I feel like now it's like, I think we're in the early innings of this bubble.
Totally. Because I guess some of their expenses have gone down because they have less labor, like less employees, while their revenue staying constant or increasing now.
Exactly. It could be increasing, or net it could be increasing because you have less costs.
Totally.
And if you're not taking on new costs because you're not hiring any juniors into your organization, it kind of gives you the freedom to like make a lot of decisions or make the bottom line look really juicy to investors, right? So definitely wild times.
What caused the 1990s real estate crash here?
You know what? I was 17, so I didn't look at the global macro picture back then. But inflation was getting crazy. Late 80s stuff was happening. I know that's not going to be very specific. And I just remember an inflation threat, and the Bank of Canada said, we need to take action. And I specifically remember TD Bank raised interest rates 2.9% in 30 days. Mm-hmm. Can you imagine? Mm-hmm. 3% in a month.
Wow.
3%.
Cooled everything off.
To cool everything off. And I think it was the threat of inflation. I'm sure we could kind of Google it up and get more specifics on that. But that's how I remember it was another threat of inflation. It's basically when you have a centrally planned system that doesn't work, and you're trying to manage a complex system like an economy with a couple levers that are centrally controlled, it just creates booms and busts constantly. It's like the same story over and over and over again.
Yeah, booms and busts, but the busts, everyone gets bailed out.
Everybody gets bailed out. And then that takes us to like where sometimes people will tell me, Tom, capitalism is like garbage, especially the youth. They'll say like capitalism doesn't work. And you can see a return to people wanting to vote for socialist stuff. I mean, look what's happening in New York City, the new mayor that just got elected.
Mondami.
Yeah. But the thing is, I try to explain is like, we don't really have capitalism hasn't been the problem. It's crony capitalism. We have a capitalism that we call the system capitalism, but when big companies, especially the banks, have problems, we bail them out. That's not capitalism. Capitalism is people can form capital, so you save. So we don't have that because nobody saves anymore.
You can't save.
Not only you can't save, but why would you save? You're through debasement. You're gonna, if you have to save for 2 years to start a new business, you're worried that the purchasing power of your savings is going to go away. So we don't have the formation of capital. Problem number one. Problem number two is when you take the capital, then you take a risk with it, and if you take a proper risk, you're rewarded. That's capitalism. Form capital, take a risk. If you bet correctly in a new business or an investment, you're rewarded. But then if you bet incorrectly, you lose. But we haven't had that. We've had big banks and big companies who lose, and then for everyone's safety, the government says, sorry, you lost, but we'll save you with some bailouts. So we call the system capitalism, and everybody kind of rails against capitalism, but this hasn't been capitalism. This has been some weird crony capitalism.
And then there's rules and regulations and taxes on top of all that to make it even more difficult for like smaller businesses.
Fair.
While the big businesses.
Yeah.
When you were younger,
step around
like,
that.
did people have much larger cash balances? Like it sounded like in my parents' era, like you could save your cash, put it in the bank. Like my dad saved up like half the down payment for his house that he bought in Brampton in like the early 90s or whenever he bought it. And he saved up the cash. He lived at home till he was like 30, classic Italian guy living with the parents. But like it sounded like you had cash and you could protect its value a lot better than you can today. Whereas today, everything is just debt. Like you were talking about how everyone's liquidity is gone and it's like their lines of credits are drained and there's no cash in the bank. But like, as long as I've been investing in my 20s as an adult, it feels like nobody really has cash. Like the down payment you're buying to buy a house with came from a credit line on another house, right? And it's obviously how the rich get richer. You keep borrowing against your assets. But like, did anybody really ever have cash or larger cash balances or more cash-based economy? Like real money in the bank when you were younger?
Yeah. Oh, absolutely. In the 80s, people had money in their bank account. Nobody wanted to talk about it. You know, no one went around saying have money in the bank. But absolutely. My father, Aidan's grandfather, worked drywall in the 1980s. From the salary of a drywaller, he paid off the mortgage on his house with it was a 4-bedroom, what is that? Maybe a 2,800 square foot house?
Yeah, something like that.
Square foot house in Mississauga, walkout basement. And we weren't considered like upper middle class. He was a drywaller who got up every morning at 5 a.m., paid off the mortgage of the house in the mid 80s by working and putting money away. And then people kept money in the bank. And my father, your grandfather, kept money in the bank. And you didn't really worry about its losing value. Remember, the debasement really started around 1971 when we kind of Nixon temporarily closed the gold window. And that's really when things started getting kind of loosey-goosey. So in the 80s, you're only 15 years into that debasement situation. Yeah. Whereas now we're 50 years. But in 1980s, people had cash in the bank. And not only that, when there was the high inflation of the 1970s, in the 1980s, interest rates were relatively high to kind of squash all that. You know, I know somebody who had a GIC in the 80s at a 16.5% interest rate.
Wow.
16.5. So you were incentivized to say, like, if you could get a GIC, that's basically just savings, and you're going to earn 16.5% interest. But on the flip side, for a little while in the 80s, my parents, your grandparents, had a mortgage at about 16%.
Yeah, it kind of balances itself out.
Well, it kind of balanced it out, but that's like a truer system.
Yeah, sure.
If like things are rough and interest rates need to go high, really high to correct the system, whereas here in the last part of this debasement cycle for the last 15 years from 1971 to today, from about 2008, the great financial crisis, to today, this last part of this big debasement situation, we just kept interest rates artificially low for like over a decade.
Yeah.
We never had the high interest rate movement. Like what happened after the great financial crisis, in my opinion, is by the time they got to 2010 or 2011, they should have raised interest rates really high. But they didn't. They saved the system and they said, you know what? This is fun. This is really fun, actually. Let's just keep interest rates low for another decade. But if they raised interest rates higher then, had a little bit of suffering then, I don't think we're in this kind of situation.
It wouldn't have got as bad as
today.
And it's just going to get worse.
And then the ratio in the 80s, to your point about did people save, because we were earlier in this whole debasement cycle, the ratio of people's incomes to assets was still closer then.
Yeah.
But now if you extrapolate out, like if you do 8% compounded debasement annually from 1969, 1970, 71, that era to today, 15 years in, it's still not quote unquote that bad. Mm-hmm. But do it another, 30, 35 years.
I looked at the numbers in that actually. The average Toronto home in the year 2000 was 240 grand. Today, the average home is $1 million in Toronto. The average Toronto income in 2000 was 36 grand. And today, the average Toronto income is 62 grand. So incomes are up 72%, while homes are up 317% since 2000.
Yeah, I looked at this too recently. It was in the 1980s, I think. It was 3 to 4 times income. And now it's 8 to 14 times income, depending on where you are in Canada. The cheapest markets are like 8 times income. Vancouver is like 14 times income. Median
what you guys are sharing is like the biggest disconnect in society right now. You have like an older population. I don't even want to use the word boomer, but an older population.
You can say it.
The older population that just looks around and says, well, you know what? We had it rough too.
Our mortgage rates were 18%.
Our mortgage rates were 18%. You guys just have to work harder.
Yeah.
And I'm like, when I talk to these people, I tried to explain, I said, you don't understand when you say that, like how offside you sound to the younger population.
Yeah.
Because you don't know these ratios, Aidan, that you just
Totally.
When you know the ratios, it doesn't matter how hard you work. How are you going to ever save for that? So we bought our first family house in 2004. I think we bought it in 2002 and then we closed in 2000. We moved in when you were born, 2002. So I guess we bought it in 2000 or 2001. 4-bedroom Mattamy home in Mississauga, 2-car garage. I think it was like 2,200 square feet or something like that. $268,000. 4-bedroom, 2-car garage Mattamy home, $268,000. Mm-hmm. That's like $1 million plus right now. It's probably like $1.4 million in that area or whatever it is. $268,000. Can you believe it? Mm-hmm. That was just as early as 2002. So it's just kind of wild.
Yeah. So how is this whole system going to reset? Because we're clearly reaching a point where it's not going to be sustainable for much longer, and they're going to keep juicing the system along as much as they can, but there's got to be a reset at some point.
I think it's already happening, and it's just difficult for people to see. Like, everyone here is a Bitcoiner, so we can talk like this. Is that like you have an old GDP system, which was dependent on labor as a major influence, productivity gains, but not the kind of productivity gains like we're talking about with AI. We're talking about like the type of productivity gains where, we can make more washing machines off the factory line with less people. And because there's a lot of buyers, then we're, through the productivity, we're kind of the GDP's going up. Right? I'm talking about today's productivity is kind of very different. We get into a bit of the nuance there. Labor productivity and debt or capital growth. That was like the old system, and it's dying. You have a labor force participation rate. Either people are choosing not to work, or less people are just not working through demographics, whatever the reason, or combination of those two reasons. So you have labor going down. You have productivity increasing so greatly that it's pulling the prices of things down, so you don't have GDP going up. Most classical economists will talk about productivity like when people, when the economy invests in productivity, you have more output.
Per input, yeah.
Yeah, I'm not talking about that. What I'm talking about is like on your phone right now, you can like do everything. You can take pictures, you can make calculations, you can book flights. You don't have to call a travel agent if you don't.
You can watch movies.
You can watch it. Like
it's deflationary.
It's completely deflationary. Like it's so productive that it's actually deflationary. That's pulling down GDP. And then the only lever left to pull is debt. Mm-hmm. And you're just kind of pumping that up, which is what we see. Canada just released its budget. And what did they say? It's going to be like this year was supposed to be 42 billion. I think it's going to be like
72,
70, 68, 72, 78,
I think 79, 80.
Something like that. What? Yeah. 10 billion here or there. What does it matter? It's like 70, 80 billion.
78. I just
78. I took 80 billion, divided it by 40 million Canadians. It's 2,000 per person. But it's not like all the people are working and contributing. There's a very small percentage. Call it 10 million of the 40 million Canadians that are actually going to be paying for that. So it's, for those 10 million, it's 8,000 per person that you're technically carrying the country along with their deficit.
Thanks for your hard work.
Sorry, their investment.
Thanks for your hard work, Anthony Molinaro.
The largest investment.
Thank you for your hard work and contribution to the society, Anthony Molinaro.
8,000.
So listen, the old system dying, but then you have a new system that's totally emerging right now. And when Jeff Booth used to say this, it kind of confused me before, like it's emerging right now. But you have a new system where the output of the system, instead of using the word GDP, I'll just say economic output. And it's clearly to me going to be a combination of energy, which is the cost of doing anything, intelligence, which is the power or engine of whatever economic activity you're going to do, and proof, which is the guarantee. And in a world of artificial intelligence and increasing digital economy, you need certain guarantees. Proof of work will be the guarantee for the money, Bitcoin. You're going to have like proof of identity. Let's face it, we're heading down this world, which either of us can, agree or argue over. But how many of us are getting spam phone calls and like text messages where you don't know if it's really your buddy? So there's whole idea in the economy that there's going to be some proof element to your identity, to money, to contracts, to everything. It's going to be a big part.
Yeah, whether it's centrally controlled or not.
Exactly.
Yeah,
I just thinking there's going to be the central digital ID control, which is like what we're seeing get rolled out in the UK.
Yep.
But then there's going to be the decentralized digital ID, which is like Nostr.
Correct.
Where you have your decentralized profile that you can move all around the internet to any different platform.
Yeah.
You have your own public and private key.
Yeah.
And there's two. So if you hold most of your savings in a debt-based money, you're still operating in fiat land. But there's some of us who are holding more and more of our savings in this new form of money called Bitcoin. And because of that, we automatically get the benefit of energy, intelligence, and proof. So there's a new economy that's forming.
Can you explain that? Why do we automatically get the benefit?
We get the benefit because the form of money that we're holding can't be debased. So when there are productivity gains, the gains collapse into the money and the purchasing power of the money increases because the productivity creates so much goodness.
Yeah.
And there's only a finite amount of money. The finite amount of money allows you to purchase more and more of that goodness.
Yeah. Because the world is deflationary. It's
because the
getting
world
cheaper when you hold that fixed unit that can
exactly. But when most people
including energy, which I hadn't thought of, but of course it's everything. It's energy too.
It's everything. And then you so anyone listening to you can actually make the transition to this greater, brighter future. You just have to have more and more of your savings, which is difficult. Let's face it. In this new currency, this new money. I don't even want to use the word currency. Money. Use this word new money. And if you hold more and more of your savings in this new money, you just automatically have more purchasing power over 2 years, 3 years, 4 years, 5 years. It's volatile, but you do. And the world is great. But it's hard to explain that to people when they're earning fiat dollars, paying taxes, pay your rent in fiat, and then who has enough money to save? Hardly anybody. You're just trying to make ends meet. Like it sucks.
Taxes are up.
Taxes, like you have
consumption economy that pushes you to.
But it doesn't take that much if you could just save every month a little bit. After a couple of years, we all know how dollar cost averaging works. It really can
totally. You just got to be able to hold.
Yeah. Well, so sorry, I'm trying to answer your question of like what's happening. There's this new system that is actively emerging right now. And so many people don't see it. So the old system is in fact dying. And that's why we see so much stuff going on in politics where they're sniping each other the way they are. The US government has been closed for how long? Like we're just going to see the old system grab at you personally for more taxes, grab at each other, argue with each other because it's going down. And those power mechanisms don't want to lose their power. So they're fighting and it's chaos. And we're going to see more of that.
Yeah.
But then if you're in this new world, everything's beautiful.
Hey everyone, before we dive back into the podcast, I've got a quick shout out about the Your Life, Your Terms report. This is Tom's weekly newsletter where he and Nick share real stories, experiences, and powerful insights to help you live life on your terms. Each week, Tom breaks down the economy, real estate, macro trends, and Bitcoin, and gives you actionable steps to make these insights work for you. No fluff, no vague predictions, just a clear path to thriving no matter what's going on in the world. Tens of thousands of Canadians are already getting the real information they need to level up their lives every week. I can honestly say it's the only newsletter that I've stayed subscribed to for years. It delivers real value that keeps me coming back for more. Join us and start getting the insights and tools to create the life you want, plus entertaining and inspiring stories from Tom and Nick along the way. Sign up for free at rockstarinnercircle.com/get-started and start living life on your terms. That's rockstarinnercircle.com/get-started. Your first step to living life on your terms. Yeah. Yes. Yeah, you do have to live in the
You
dying
have to
world.
live in those,
So it's not a portal you
it's
can
chaotic.
step into.
Yeah, it's not quite as beautiful as I just met.
It is hope, and it is an escape, and it's the best that you can do, really, given everything that's going on.
Yeah.
And then just to explain that further, like energy is just like what you're talking about, like the power of the new economy, like actual energy.
Yeah, like yes.
And then you're seeing that now, just that trend going forward has been massive with all the energy, like all the headlines you're seeing in the media today for nuclear power, solar power, everything, everywhere.
Data centers that require energy, everything.
No, and then when you say intelligence, you mean like kind of like AI.
I mean, AI, it could be human intelligence too.
Totally. And just productivity in general. Like it doesn't need to be like AI on your laptop, but it could be like, we're going to have
a smarter way to do something.
well, and just on the roads, like maybe we won't be driving cars. There'll be self-driving cars everywhere, self-driving trucks everywhere.
Robo-taxis. Yeah. So energy to me in an economy is the cost of doing anything.
Powers the economy.
Yeah. Yeah. Because like if you're going to make something new, you need an energy input. Like we can call it, you can call it real energy, like watts, or you could just call it like the human energy that you need. But there's some energy component to doing anything.
Yeah. And it does seem now going forward, we're just going to need more and more energy.
Absolutely.
To function everything else that's happening on the intelligence side of things.
Absolutely. And the intelligence side seems like it's going to explode. Like I'm shocked that people don't know that we have full self-driving in Canada. Like my Tesla will drive around the community here, see stop signs, people. It's fantastic. Like it'll take you to the destination directly, highways, roads, go through construction stuff. Like it has no issues driving from point A to point B with full self-driving right now.
Tesla and Waymo, I believe in Austin, Texas, and I don't know if it's in California, Palo Alto, somewhere like that. They already have self-driving taxis. Right now there is someone sitting in the car, like not doing anything.
Safety driver.
Yeah, the safety driver. But I think Tesla's planning to get rid of that by December of this year.
That's
which is
crazy.
nuts. So soon enough, we're going to see cars. We'll see
that makes me
how long it takes in Canada, but soon enough, you'll be in the US seeing cars go around and there's not going to be a driver in it.
Well, I was in Arizona in May this year, and the Waymos are driving around and they pull up to you at a red light and there's nobody in the car except
so you already
maybe
saw
two
it.
people in the back seat, right? That are actually taking the Waymo.
Nuts.
So it's either empty or you see people in the back seat.
Yeah, that's wild.
And they pull up and there's nobody in the
And they didn't have a safety driver at the point when you were looking at them?
No safety driver.
Wow.
Full self-driving. They have all the sensors. Like it looks like solar panels on top of the car. So it's not as sleek looking as like a Tesla.
Sure.
But it pulls up and you're like, they were all over Scottsdale. And I was like, the future is already here down here.
Well, and the future is here now. Like with the Teslas that everyone's driving on the streets here, you might be driving on the highway right now next to a Tesla that the person's not even holding the wheel.
Yeah, and there'll be a fight.
It's Andrew Palhidas, and he's like watching a movie.
There'll be a fight. Like there'll be people lobbying against this and
for sure
regulations against it. But if the cost of an Uber from a self-driving car is so much cheaper than it would be paying for a normal Uber, eventually you're just incentivized to want the cheaper product.
What about the safety aspect? I mean, there's a whole bunch of people who would probably rather not have a driver in the car. Let's face it.
I think that shift isn't there for most people yet, though. I think most people are probably worried about the car driving itself. Most people don't understand how good it is. You have a different perspective seeing the Tesla yourself.
Yeah.
I think most people are probably worried and don't understand how good
any
it's
new
gotten.
technological change, right? Especially with something as serious as driving and car accidents and stuff. But I saw Elon tweet the other day, like the amount of pets that will be saved, the amount of pets that are like driven over by cars. He's like,
my God,
I estimate 50 to 100 million pets per year would be saved from cars not hitting them on roads.
The way I look at it is I have two eyes. The Tesla has 8 cameras. I figure that it's going to see things all around better than I'm going to see.
It's not even a question.
At night on my dashboard, when I'm driving down a dark road, it will see somebody walking their dog and they'll display it on my dashboard of the Tesla before I can see it with my eyes. Like it has already picked it up and sees that. So like it seems really strong. And then the intelligence part on our new formula, energy intelligence and proof versus labor productivity and debt. On the intelligence aspect of the new formula, I was driving down the road the other day where the Tesla was driving me here to this office. And then I asked Grok, which just got installed on the Tesla, which is their AI. And I said, hey, take this one book and give me the premise of this book. Okay, now give me the premise of this other book. Now, can you tell me the similarities in the two books?
Was it Fourth Turning and End Times?
No, you know what? It was like, no. It was actually, it was The Price of Tomorrow by Jeff Booth and End Times.
Oh, God.
So it was End Times.
I knew one of them would be End
Yeah, End Times is spooky, man. End Times is completely spooky. Luke Roman suggested that book, and then I read it, and I wrote about it for Rockstar members in the newsletter, and Nick was like, that's the darkest thing you've ever written. Because that was really dark. He goes, can you make
This
your
is what
article?
you get as a Rockstar member.
Yeah. Welcome to Rockstar. Yeah, here's this book. Yeah, it's your first month as a Rockstar member. You get the newsletter, and there's this book called End Times, and it's like just about like this
I just
horror.
want to buy a student rental.
Yeah. Tom, I'm just trying to get a student rental at Western for my daughter. Can you please stop talking to me about End Times? But Grok was telling me the similarities of the premises of both books as the car that I'm in is driving itself. And I just had that moment. I'm like, what is happening right now?
Yeah.
I'm not touching the steering wheel, and I have artificial intelligence summarizing books and basically.
Yeah, wild.
So this all goes to your GDP formula. Like in this debt-based system, all this productivity is detrimental.
Correct.
Because to Jeff Booth's point, it causes deflation. It causes prices to come down, but prices must inflate and expand in order for the system to continue. So it just requires more debt.
Exactly. And I just want to explain, because some people don't understand when you say, well, why does it require more debt? And the reason the old system requires more debt, because the money itself is debt-based. Every dollar that comes into the economy is owed back to the system plus interest. But if we go back all the way to the very first dollar that ever entered this system, and let's say dollar number one comes into the economy. Well, it's owed back to the central bank plus interest. So let's say plus 10 cents, right? Let's say that's a 10% interest rate. Well, if the whole economy is made up of that $1 that got borrowed into existence, and I'm grossly oversimplifying here, but it does get the point across. How do you get the 10 cents to pay the $1.10 back? Mm-hmm. You can't. There's only $1 in existence. The only way to get the 10 cents is to borrow more money so that you can get access to the 10 cents.
Which comes with more interest.
But it comes with more interest.
Yeah.
And that's the system that we're in, which means it always requires more debt. And the GDP number, which is measuring a debt-based money, it's counting debt-based money, the GDP number mathematically must always go up or the system collapses.
Yeah, your dollars can't get stronger because it just makes it more difficult to pay the debt back. So that the gains that you're getting from deflation and all this technology advancements, if that's trying to suppress prices downwards, making it cheaper, they need to print the difference to offset that. Otherwise, they can default on their own debt, and they can't do that. So they're forced to print like the gain that we're supposed to be receiving.
Which is what we're seeing in the Canadian budget right now. They're printing kind of the missing money. And to your question on the real estate market, the reason that things are tough right now for people is that things got out of control with all this stuff in the pandemic. They raised rates to try to calm it, and now there's not enough dollars floating around. But guess what? Everybody's Visa card is owed back with interest. Well, if you don't have new money flowing into the system,
it can't be paid back.
How do you pay it all back? It gets a lot harder to pay it all back.
Yeah.
Which then starts
wiping out all that debt.
Yeah. So
which collapses all the collateral that the debt is based on.
Yeah.
Which collapses the entire economy.
It collapses the entire economy. So then if you're talking to like people who think the economy is going to collapse, I'm like, okay, fine. I'm with you. Like, I understand where you're coming from. And it would be great if real estate prices came down. But you have to understand the people that are really holding a lot of this stuff are the banking system. Mm-hmm. You think the banking system is going to allow a full real estate collapse? Like, let's face it, what we're having now is measuring prices from the top of 2022, the very peak, and coming down. But anyone who bought properties in 2013, 2014, 2015, they're still like kind of way up in nominal dollar terms. Mm-hmm. So like
the banks can survive this, clearly.
The banks can survive this, but if it gets really, really, really ugly, you don't think the banks are going to just tap somebody on?
Well, it's just like 2008, they'll bail them out, right?
And when you see the banks, they're so now, they're like the Bank of Canada is supposed to be independent, but everyone sees how intertwined they are. So when you're talking about the banks, it's really the banks and the Canadian government. Not officially.
Correct.
But it's clear as day.
Well, here's the thing with your example, right? Like if every dollar that comes into existence has debt on it, has interest owed, who is that owed to? Well, it's owed to the central bank. Well, who owns the central banks? Well, all the private banks. So it's like the bankers. So the entire world is in debt to the bankers. And what's global debt to GDP? Like 4 to 1?
3.5. Yeah, sure.
3.5
Round up 4 to 1. Sure.
Right. So there's, so four times the amount of interest or debt owed than we actually produce in the entire world.
Yeah.
The entire world is in debt.
Yeah.
So I've seen funny videos from like, young people on TikTok or whatever it is. I'm not on TikTok, but on Twitter maybe.
Whatever, sure. You got a burner phone somewhere with TikTok.
You're scrolling.
I'm not on TikTok.
Doom scrolling.
And they're like, who the hell do we owe all this debt? The entire world is in debt. Who do we owe this debt to? Like Mars?
Yeah.
And it's funny, but it's like, who do we owe the debt to? We'll trace it all back. You owe it to the bankers.
Yeah.
The bankers run the world.
Yes.
They own everybody.
Yeah.
Like they literally own everybody. You're enslaved to the bankers. It's the biggest conspiracy of all time.
Anthony got to the bottom of the rabbit hole.
It's the bankers. Like, forget the politicians. Like, you don't have democracy.
No.
You've got two politicians both enslaved by the bankers because they work in this debt-based monetary system.
Yeah.
You're in the monetary system.
Yeah.
That encapsulates everything.
Everything.
And that's why Bitcoin is the first crack in that, the first chance at freedom for like 8 billion people.
You preach it, Anthony.
Oh,
You got to get a clip of that.
Yeah.
Took me like 10 years to figure that out.
Well, I think you're ahead of the game, man. If you're figuring it out now, I think most people don't have it figured out.
Yeah.
So it's the bankers. It's the bankers.
And I think people might not realize the cause of all this, but they see the symptoms. Like they see the cost of living going up.
And that's what we all argue about.
Yeah.
Socialism, capitalism, Democrat,
Yeah, and then when we
Republican.
don't have a true capitalism, I can see the value of, not value, but I could see the argument that the younger population would say, well, we need to vote in socialist type policies and politicians because they hated capitalism. But I'm like, damn,
it's not working for them.
You're not, it wasn't really capitalism. We actually had this like socialist system that was saving the banks. Now you're voting to double down on that system that is causing the problems that you already don't like.
Well, that's the thing. All these groups, their instinct is right. Something is wrong. It's not working for them.
Correct.
And they all have different solutions. But if all those solutions are based on misguided info, or they're all operating within the control system, they don't understand it's the bigger control system that they're encapsulated in, you can't do anything.
Exactly like what we're seeing in New York yesterday.
Mm-hmm. Yeah.
You have the illusion of choice, and these policies do matter. You get some idiot like Trudeau running the country. Obviously, he's damaged a lot of things. Terrible policies, right? Would have been better if we had more competent leaders, but they're still within the system.
Yeah. You need to fix the base of the system, which is the money. And that's why I think people roll their eyes at Bitcoiners when you say fix the money, fix the world. But like, it's true.
I think so. Like, I've kind of fought it for a while.
Did you?
Yeah, like when you first started teaching, I'm like, is it really all the
Tom,
money?
when you said that before, I really thought you were out to lunch.
Well, I questioned that. I'm skeptical. So I'm like, is it really all the money? Can you really trace it all back to the money? There's the media, there's this, there's that. But then you roll it all back, and it's like, who controls the media?
How's the CBC?
What system is
how's
it
the
all
CBC
in?
funded? They print new money that they don't have. It's not independently profitable on its own.
Yeah. We all want world peace, right? Everybody, every beauty pageant winner for the last 50 years. What do you want? I want world peace. We all want world peace.
Wow, shit! You went to beauty pageant. Like, who even uses the term?
Who doesn't want world peace? But at the end of the day, like, how are all the wars funded? Well, by the printing of money that the taxpayers don't have a vote on. Why do we pay taxes if you just print the money? So it's like all these wars that we don't want, they're funded by the money. It is the money. It is the money. I've come to the conclusion it's the money. It took me a while.
I love how usually I'm going off on something.
Yeah, Anthony took over. No, that was great.
I've been watching a lot of stuff this week. I'm fired up.
It's the money. The best book on this, to me, it's a deep read, so maybe it's not the best, but in 2008, I read The Creature from Jekyll Island, and that was like, I remember reading it at home. I guess, Aidan, you were a lot younger, and Carol, mom, was saying like, what are you reading? And I was like, Carol, it's like a mystery novel. I'm reading the truth of the world, but it reads like a mystery novel. Like, these people went and they created the central banking system.
Yeah.
And from that central banking system in 1913, all these things happened. And did you know there were central bank attempts in the 1700s and 1800s, and some US presidents shut it down, and we had eras of time where there was no central banking, and we all survived. We didn't need it. But then in 1913, they passed it on Christmas Eve. I think it was like actually the 23rd, not the 24th. They snuck it through Congress and they passed it. And we've all been living under this system that got intertwined into the entire Western world. Yeah. And now there's central banks in the only countries that didn't have central banks, I once knew the list. It was like Libya, Iran, and there was like one or two more.
All of the USA's enemies.
And then I was like, oh my gosh, this is rather interesting.
Where they've done all the regime changes?
Yeah. I was like, oh, the only countries that don't have central banks happen to be the number one enemy of the West.
Yeah.
So, it's the money. unfortunately.
Yeah.
But yeah, so once you figure it out, you dollar cost average into a little bit of Bitcoin. And there's something actually I want to mention on the Bitcoin thing that are still confused by a lot of people is you don't have to buy, you can buy $10 of Bitcoin or $50 or $25. Sometimes people still think, even in 2025, as we're recording this, that you have to like,
That's wild.
buy a chunk of Bitcoin or whatever the price is. No, you can buy like $10 of it. So anybody for their kids who want to start saving can do dollar cost averaging at $10 a month, you know, $25 a month.
I've like just in the past 2 years or so recently just returned to like the basic, you know, foundation of personal finance, which is just pay yourself first. So as soon as income comes into my bank account, I take money off the top, I pay myself first, I put it away into Bitcoin and I live off the rest. And
Smart.
for a long time, I didn't do that because I don't think I was incentivized to do that because I didn't understand Bitcoin. I'm like, what do I save in? I'm just going to like, you know, lever up and buy a property, lever that up, buy another property, like keep some short-term cash. Sure. But like, I can return now to those basic roots, which is like what our parents grew up on, which is like you get paid, you put it away, you get paid, you put it away. Now you can kind of return back to that normalcy.
And it's weird. It's strangely freeing because you're like, oh, I don't have to think about how to invest my savings. My savings are in good money, which holds its purchasing power. Like it's end of the story. You don't have to start thinking like, oh my gosh, what am I going to do to save it or put my savings in before it loses purchasing power? I need to do something. You're like, no, just.
It does feel like a life hack because then you're still just outperforming everything.
Well, yeah. And then short term, people will say, oh my gosh.
Sure,
it's,
maybe not in the last, not year to date.
Not today.
So how are you? So then what are you guys thinking, I guess, from your perspective on things outside of Bitcoin? Like, are you doing any other investments in any of the other, like, you know, shitcoin stuff, like just for fun? Like, is there a small percentage of your money that you're like, oh, I'm just going to have some fun with this, or no?
I have no, I wouldn't say shit coins. I have a little bit of like money, like in Tesla for fun.
Okay.
Like in a couple Bitcoin mining companies, stuff like that. But yeah, that's more just for fun that I like to do. To see if I can outperform Bitcoin. It's so hard. I'm like, screw it. Let's see if I can actually do this. But it's with a tiny percentage of my savings.
Yeah, got it.
Yeah, I have a little bit of fun money. I own Strategy, some shares of Strategy, and I still own a student rental and Bitcoin.
Yeah. Okay.
And cash.
Okay, you guys are pretty much Bitcoiners.
Yeah.
Venturing out, the craziest ones seems like a little bit of Tesla, and Tesla seems like it's going to be the
trying to think. I must have
future.
something else in there, but
that's just what Elon's doing with his technology is so insane that I almost want to buy something.
It's too fun not to be a shareholder.
I just want to be a part of it. And
totally.
One share of Tesla.
Especially before the Tesla humanoids really go mainstream, because when that comes mainstream, I got to think the cars are almost going to be second. I guess the cars are still going to be a big deal. Let's face it.
Yeah.
But when you start thinking about replacing labor, I was reading some venture capitalist report that said the global labor market is a $50 trillion market. And the VCs are making investments in robotics, not to come after like a little bit of that market. They're coming after the $50 trillion global labor market. I'm like, holy
I like what Jordy Visser says. It's like we haven't had that chat GPT moment for the robotic side of things for most people to see. Like everyone sees now the power of AI like online on their laptops, like the software side of things, but no one's seen it really on the robotic side of things yet. And when we have that moment, everyone's going to be like, holy crap.
You know, there's going to be one demo with Elon where the robot starts folding laundry or something basic, and everyone...
And already what you're seeing is nuts, but I still don't think everyone is seeing what's happening there. But when it kind of goes mainstream and everyone sees the power of these robots and how crazy it is, how many jobs are going to be lost just in the manufacturing industry.
It'll be the Jetsons. Everybody has a robot in the home taking care of.
As soon as a robot can fold laundry, like, do you not understand the pain and suffering I go through?
All the meaningless chores.
If I have to fold laundry, I'm just like, I explain to my family, I'm like, folding laundry is like, this is horrible. Yeah. This is actually the worst.
Doing the dishes, home repairs.
I don't even mind.
All of that though is coming second, I think. First, it will just be like the standard like jobs in warehouses.
Sure.
Yeah.
And then like
pick up a box, load this pallet.
Totally.
Yeah. Any physical labor.
Yeah.
Yeah. For sure.
Okay. How are you guys using artificial intelligence? Just for anyone listening because I think most people are still using it as like a replacement for Google search. Like that's it. Are you using it in any way that's a little bit different than simply searching? Like how do you guys use it? Which ones are you using? And can you give us an example of just how you're using it right now?
My main use case for it is just learning about things, like learning all this stuff about Bitcoin, learning about the macroeconomy, learning about the banking system. I've learned more in the past 2 years using ChatGPT than I think I have my entire life.
So why do you, because you could have just Google searched some stuff up.
No, not the same way. Because I have conversations with it and people make fun of me, right?
So it's your
Chat's
friend.
like my friend, but it's like my advisor, and not just on learning stuff, on different things. I'm like running stuff by it to get like an objective third party kind of opinion on it, which sounds crazy if you haven't kind of used these things. But Jordy Visser talks about it too. He's like, you have to like, if you're going to use an LLM till its full extent, you have to build a relationship with it. It has to learn about you, and then it can give you tailored advice, or it can question your beliefs. And so I've been using it to just question the world and learn about things is the main use case.
How is it are you going back to one thread on one subject over and over? Because it's not really good at remembering every detail if you start new threads in like ChatGPT. Or are you
I'll start new threads on different niche topics. So like a home repair thing, like my coffee grinder the other day kind of broke. So I
the gadget machine?
No, that did break and I fixed it, but I got a burr grinder and it stopped grinding. And so I was just researching like how to fix it or whatever. So I'll start a new thread for that because it's a niche thing. I do have some go-to threads where I've gone deep with it, and it's like if I want to pick back up in that
you will go back
train
to
of conversation, yeah, I'll go back. But it's honestly over time, I think the memory's gotten a lot better, and it knows a lot of knows about my career, knows about my aspirations.
It's
knows
weird.
about my relationship.
I asked it to summarize a podcast. And after it summarized the podcast, it then said, would you like me to give you like the top 10, you know how it'll give you recommendation, like the top 10 points that would relate to what you're doing? And I'm like, okay, yeah, sure. And then it says, well, for your newsletter, you might want to write about this. And, you know, at events, you could explain something like this. It knew that I wrote a newsletter and, you know, host events where people come and we give presentations. And I'm like, holy shit, I didn't even ask it to reference those two things. It just did automatically. So it is remembering. There's some state to the memory.
Oh yeah. It pulls across the spectrum. Like you can ask it a question about,
which is scary as shit.
Yeah. Like I'm trying to think of an example.
It has
like,
all your
I'll take
data.
a photo of my apartment and be like, oh, what could I do to make the apartment nicer? Right. And it'll be like, given your affinity for minimalism, for simplicity, for this, for that, you could, put some frames there, do this.
It's nice it didn't say cheapness. Anthony, you don't have anything in here because you're cheap.
And so the more it learns about you, the more tailored advice it can give to you. And the more you can use it across different domains. And that I think is the incredible part about it. Because now we have like a Rockstar ChatGPT paid account we use, but I pay for my own account. And so a topic I've been exploring was the CPI and how it's manipulated, blah, blah, blah. And so I wrote that article for the Rockstar newsletter, but I went to my personal...
Another dark newsletter. Great.
I went to my
Another
personal...
dark newsletter article.
You don't know what you're signing up for with
No.
Rockstar. Yeah. You come for the student rental, you stay for the revolution.
The darkest.
But so I was asking about CPI. So I went to my GPT and was like, hey, I wanted that CPI thing I've been exploring. I want to write a 2-page article for Rockstar now about that, like summarize all my thinking and what I've learned about it and give me an outline for it. And then I can expand from there, right? So you can use it for a lot of work-related tasks. Tenant placement stuff, I'll take single key credit reports. I'll take the Verifast employment reports. I'll pull them all. I'll stick them into ChatGPT. Show me where there's things that don't add up.
And it'll find things?
Yeah, show me any red flags. And it's like I could do all that work, or I could have my GPT do it much faster for me.
Mm-hmm. Yeah, I'm using it the same way. If I don't understand anything in like a podcast or something, I'll just take the transcript, copy and paste it in and start asking questions about that. Or same if a couple months ago, we couldn't get my friend's car. We're trying to jump his car. It wasn't working. So we're like, is this hooked up correctly?
So you took a picture of like the battery?
Yeah, the battery. And
was it helpful?
I think we had it right, and just the batteries, we just couldn't jump it.
Okay.
But that confirmed, I think we had everything plugged in right.
Oh, but that's interesting. You just took a picture of the situation.
Yeah.
Threw it into chat.
Yep.
God. I use it as like my personal chef assistant. It's like I've got Gordon Ramsay advising me now. I'll take a photo of my ground beef and be like, is this... I've been trying something with the ground beef where you don't kind of like... Normally when you just brown ground beef, you're actually just boiling it, because it's just the water's cooking out of it.
Yeah.
But what you really want to do is cook all the water out and have it where it's almost skipping on the pan. And it's like, I forget the word. It's not caramelized, but it's kind of caramelizing the meat.
Okay.
And so I took a photo. I'm like, is it, caramelized enough? Am I overcooking it? And it looks at and it's like, that's the perfect level of brownness. You're good. And it takes it off. Or mid recipe, it'll give me cooking terms or stuff I don't understand, or be like, well, how do I know if it's overcooked, if the broccoli's overcooked? And it's like, we'll stick the fork in.
So you're just talking to this thing constantly at home?
Constantly, yeah. It's like...
Do you talk to your fiance or no?
I do still, yeah.
Okay.
We still have a relationship.
Okay, good. There's a third person.
Getting less important. No, I'm kidding. But, it's having a 140 IQ expert at your fingertips in any domain.
but it can see the color of the meat. Let's say your camera wasn't very good on your phone. You know what I mean?
It's a good camera.
Huh. No, that's interesting.
Yeah.
I mean, it makes sense. When I was in Italy, this washing machine at Airbnb that we were at had like 18 million dials, and it was all like obviously in an Italian. And I just took a picture of it and threw it into chat and said, like, how do I just do a standard? Like, what are the settings to make a standard wash on this machine? And it gave me the settings. Like, I didn't have to read the manual or anything. So yeah, that stuff's brilliant.
Yeah, it's just way faster than going to YouTube videos and trying to figure out it in a YouTube video or opening like the manual guide.
For someone who wants to get a transcript and get summaries of podcasts, because now you don't even have to listen to a whole podcast. How do you get the summary, the transcript?
You just go on YouTube. It's in the description. It'll say like show transcript. So sometimes you need to open the full description, click show transcript, and then it'll pop up on the right-hand side. And
so
then
there's a button in the description.
Yep.
Okay.
On every single YouTube video, you can get the transcript.
And then it pops up on the right-hand side.
Usually, yeah.
And you highlight it all and throw it into chat.
Yep. Or just Command A. That'll select everything. And then...
Come on, Command A selects everything?
Yeah. You don't have to actually scroll the whole transcript.
You didn't know that?
No.
Command A is a good one. No, you don't got to scroll.
A Luddite.
Yeah, totally.
But yeah, that saves a lot of time. That makes it a lot easier for sure.
I was in Europe this summer. I had a couple days to kill. And I'm like, what should I do? Like, give me some travel.
You know what? We did that too when I was just there. Yeah.
Yeah, like I was in Geneva. I had a couple days to kill because I was with my friend who's running a race, and I didn't plan the trip. I just went along with them, and they had planned the trip. But then I looked up where they were going. It's like kind of boring. This like Swiss town. I'm like, I don't want to go there. So I'm like, I'm in Geneva. I've got 2-3 days to kill. Like, where should I go? And it's like, well, there's this beautiful town called Annecy. Take this train. You get there. I'm like, what am I going to do? It's like you bike around the lake. I had one of the best days of my life in this beautiful town in like the
Were
French
you just
Alps.
by yourself with this friend of yours who's
And chat was just like recommending the whole thing. I was traveling with chat.
Were you with another human at this point?
No, I met back up with them in Paris.
So you were by yourself.
Yeah.
So it was just you in chat.
Yeah, I just took off.
That's awesome.
I'm going to stand around and watch my buddy. My buddy ran a 100-kilometer race
100K
in the Swiss mountain, which was cool.
Oh,
and I came along to
yeah.
like support him and stuff. And it's why we went to Switzerland first on this Euro trip. But I was like, I don't need to stand around and like give this guy water. So when I got there, I realized like I'd be standing around, watching this guy or like run by. I'm like, I'm just going to go take off, do my own thing. And he was with his girlfriend. So I was like, that's fine.
Yeah, we did the same thing in Europe. Chad just gave us a plan for the day, where to go, like what historical places to check out, restaurants to stop at.
It knew because it had access to your location. It could just start telling you, hey, you're here, do this.
I didn't even give it access to my location, but I just said where I was.
Okay, got it. Because I know in Croatia, I asked that when we were in Split, and I guess I'd given it access to the location. It's like, oh, down this passageway, this, like it starts telling you history of the area. You're like, you have a tour guide like in your pocket wherever you're standing. Yeah. That was your first time in Europe, right?
Yeah, it was.
So and yeah, you said it was good. Now reflecting back, like, is it what you thought it was, or?
Yeah, it was awesome, man. Just
what stood out for you?
The history, just the sheer amount of history. The architecture was beautiful, like the culture, the different foods, just the sheer amount of culture packed in, like different cultures packed into such a small area.
What country did you, so
we went to Geneva, and then I did Annecy, which was like fucking heaven on earth, like gorgeous. Okay. And then we went to Paris. We spent a few days in Paris, and then we went to London. Don't need to go to London again. And then,
one and done.
And then the English countryside for like an old friend's wedding.
How was the English countryside? I've never been.
It's gorgeous. Yeah, it's beautiful. Yeah. That was the part of England I had always wanted to see. Like that was kind of like the idyllic English, British countryside.
Got it.
That was like, I would go see that. I didn't care about London really.
Yeah. Actually, I have been out of London one time to Bedford.
It's okay.
Oh yeah.
It's very westernized. London felt very similar to Canada for me. And I was like, yeah. And so I was more interested in exploring like France, and because their culture is so unique, or Switzerland was super cool. You know?
I did like London. Everyone goes out to the pubs before they go home.
I like that. I like that pub culture.
Yeah.
Just the social aspect.
Like just out on the streets.
I can see why like the stereotype is they're so miserable, because the weather is just down.
Yeah, rainy,
cloudy, kind of like November weather here. And I'm like, I see why they just drink and complain. Like, it's kind of funny, but I do like the pub culture.
Yeah. Okay, so then you guys are both using AI just basically for anything that comes up. You will lean on AI. You have it on your computer and on your phones.
Yep.
And ChatGPT, any others, or is it ChatGPT?
I use Grok too.
So ChatGPT.
And Grok, Gemini sometimes.
And Gemini. Okay. Anthony, for you?
Mainly chat, just because it's, to my point earlier, it's learned a lot about me. And so it's tough to now migrate to another AI. But I would like to try Grok specifically. And
Grok's cool because just for the videos, it's fun to like put a picture in Grok and then ask it to do something and turn it into a video, and those videos are hilarious.
Yeah. And I feel like it's better for like real time news events.
It is, just because it has all the Twitter data.
It's pulling it from
If I want more current information based on what I'm doing,
I'll use Grok.
Yeah. So I understand chat has limitations. It's just because I've built up that profile, it's really easy to just default to.
Okay. And then have you checked out Grokopedia yet?
No.
Okay. You know, it's the competitor to Wikipedia.
Wikipedia is a complete joke. So
yeah,
like,
so they launched Grokopedia. I think it was live like 2 weeks. It's 2 weeks old.
They're still in like their beta testing.
I looked at the history of Croatia on Grokopedia. I'm like, damn, it's actually really good.
I haven't actually gone on the site yet. I've just heard
as soon as I saw one tweet from Elon about they're doing Grokopedia, I'm like, well, that's going to eat Wikipedia because that's just a propaganda machine now.
It seems like it's become a propaganda machine. Yeah.
For the most part.
Wild.
Okay, before we wrap predictions, then real estate and Bitcoin over the next 12 months. Are more rate cuts incoming with liquidity coming in to pay off the new federal debt, juice the market here still? Do we have legs to go on Bitcoin? What are you guys thinking?
They have to print. They must print.
Yeah.
They will print. You just got to survive the hard parts where they don't print or where it's not pumping your asset.
I think the real estate market slowly gets a little bit more transactional. I don't know if prices really move because I think in the spring, a lot of people who've been wanting to sell are going to list. So
and then maybe a little bit of a divide too. Condos might lag still a little bit, while single family might be a little bit stronger.
Single family, will always be stronger than condos. Yeah. So there's nuance here, but I think it will start to pick up. It's just, I don't think we're going back to like pandemic days, but I think
transactions volume picks up.
Yeah.
As
And
well.
we can even see that in the brokerage. Like we're up from the bottom, which was like last winter and the spring. We have more transactions happening. So I think that'll just kind of slow. I think it's going to be a slow grind to higher transactions. So more activity. Prices might stay kind of where they are for a little bit just because there's going to be a lot of inventory, I think, comes on the market over the next 6 months. But I think it does
specifically condo inventory you're talking about.
Yeah. Yes.
Not much single family home inventory coming on the market.
No, but I can see a situation in the spring where a bunch of people who wanted to sell their single families.
Sure. So listings are high.
So I think it's going to be a bit of a muted price market for the next little bit, but there's going to be more activity.
So rates drop in the further Bank of Canada rate cuts?
Yeah, definitely. I don't know if we get a December rate cut in Bank of Canada, but I think we get 2 or 3 next year because we're going to have to match what the Fed does, and the Fed's going to have to continue cutting rates just because they have so much debt that needs to be refinanced. They're also going into their midterms next fall, so they're really going to want to juice the economy and try to get economy going, which will likely mean rates are coming down there. So Bank of Canada will kind of follow. It always follows. Generally 95% correlation or whatever it is. So I think, that's going to have an effect here. And then the Bitcoin market's just going to benefit from that because we didn't have a 4-year cycle. And that US debt that had since 2008 had been on that 4-year term renewal cycle. Janet Yellen moved it that 1 extra year in 2020 to 5-year, and that's all being refinanced now, like over the next little bit here. I think that liquidity is really going to find its way into Bitcoin, and I think we're going to have a nice run in Bitcoin. I really think we do. And it's nothing to do with Bitcoin. It's just more fiat dollars around.
Totally.
And finite amount of Bitcoin. So it's a mirror into the fiat world. And
for sure.
The dollar price will go up. So
what happened? Janet Yellen pushed out
since 2008, like the chunks of U.S. debt that were being refinanced were like always on a 4-year term. Mm-hmm. And in 2020, she extended a chunk of the debt to 5-year term. So instead of 2024, where it needed to be refinanced, it all has to be refinanced starting now. And every time there has been a big chunk of U.S. debt, it's like $9 trillion of the $37 trillion has to be refinanced over like the next 9 or 10 months. And every time that has happened since 2008, the U.S. government magically drops rates to make the refinancing of that U.S. debt more affordable. Mm-hmm. And we didn't get that last year, and everyone was kind of confused with what was happening, and it's kind of delayed the liquidity coming into the market. And it looks like a lot of that is because of the debt that went from a 4-year term in 2020 to a 5-year term. Mm-hmm. So it pushed a lot of the necessity of lower rates about a year later.
So 2008 with the crisis, they went into a massive amount of debt.
Yeah.
To bail everything out.
Yeah. And then everything was
interest
being financed like every 4 years, like 2012, 2016, 2020.
Yeah.
Like it was on this 4-year cycle. Mm-hmm. And she changed that in 2020.
Why 4 years? That's just when the kind of chunk of the debt rolled up? Because what's the majority? Isn't the majority of their debt short term?
Now, from 2020, a chunk of it is short term. I've never really studied like the breakdown of how much is short term, how much is long. Yeah, I don't know, but I do know that it went from a 4-year cycle, and there's about 9 trillion of that due right about now. So then it's just obvious, like, oh, I get it. Rates have to come down because they have to refinance a chunk of that, and they can't have rates high. They're already in a screwed situation with their budget and deficit.
Yeah.
Yeah, the long GDP.
So I think it's just that simple. Bitcoin goes up because liquidity is coming, and everybody thinks like, oh my gosh, they're kind of panicking. And I'm like, oh, I don't think you should panic. More dollars are going to be printed. You want harder assets. I don't know. So next year, I think is interesting. Real estate market gets a little looser. Bitcoin gets.
I think even the tech stocks have legs into next year. I don't think there's any bubble bursting at this point.
Yeah, people calling for an AI bubble right now. I think you're way too early. Like, I don't think that the tech bubble that I saw started I feel like it was 96, 97. In 1997, it was like, oh, Nortel and Cisco and Oracle and Microsoft and Netscape. And that was like 98. And everyone was like, oh my gosh, this is crazy. It's a new world in 99. And there was just years of
totally. Yeah, I can see a correction at some point. Yeah. But I think it's far too early.
For AI to be at a bubble after 2 years of chat coming out, I'm like, I don't know. I think I think a bubble is going to run a little bit longer.
Yeah.
Yeah.
Mm-hmm. Yeah. And we saw it with crypto, with all the ICOs, similar kind of boom to the .com boom, and now it's the AI boom.
Yeah, and the biggest difference back then is all the telcos started preparing for the internet by laying all that fiber optic cable because they had nothing else to do. They were kind of losing market share and this is how we're going to make money.
That's a good point.
But there wasn't enough data going through those fiber optic lines.
So it wasn't being used.
Yeah, but today, and this is where I really appreciate Jordy Visser's perspective on this, is every single chip that comes into the market, some company is actually buying right now. It's not like there's all this kind of
demand
dark
is
fiber optic
exceeding supply.
Yeah, there's not all these chips that are just lying around. It's every chip that's fabricated right now, there's a buyer for it.
Totally. Every data center coming online right now is being put to work.
Yeah, I can see 2, 3, 4, 5 years from now when some companies that spent $200 billion on some data centers are like, oh shit, we screwed up, and then there's a problem. But I just feel like we're too early.
Yeah. To your point, they had to build the physical infrastructure of the internet, lay massive internet cables below the oceans connecting continents. And now that that's all built out, all these other things that run on top of it, like Bitcoin, like crypto, like AI, can now run much faster.
Yeah, and when just to bring up that point, when they laid all that fiber optic cable, there was no Netflix. So there was nobody streaming. There was barely YouTube. Mm-hmm. So now we're doing all this AI infrastructure build out.
And it's being put to work.
Well, it's being put to work, but also we don't know what's going to come from that. When they laid all that fiber optic cable, nobody predicted that Netflix was going to take down Blockbuster and threaten Hollywood and change Hollywood. Nobody, if you said that in the year 2000, they're laying all this fiber optic cable, so you know what? Hollywood is screwed. Nobody said that. Do you know what I mean? Nobody. So now when they're putting all these microchips and they're making all these data centers, what second order effect is going to happen in the world where nobody is calling
Totally. Right now, the majority of those data centers and stuff is just using to power all these LLMs that we're talking about, the software side of things, but none of that still is being used really on the robotics side of things that will greatly pick up over the next couple of years.
And so if there's a bubble in all of this stuff, okay, great. Yeah, some people are...
Yeah, there can be a valuation bubble, but it's definitely not the usage of the AI itself isn't slowing down. That's rapidly increasing.
And my other point is you're missing the big picture. When they laid the fiber optic cable, there was a bubble in some of that stuff and the telcos got hurt. But ultimately, Hollywood and Blockbuster, the store that was everywhere, got destroyed. What is the thing that is going to get destroyed? Everyone's so focused on bubble, 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 bubble. And I'm just thinking, guys, no one's thinking about the second order effect of having this much intelligence that is being created.
Just on that example, I'm just thinking, well, it's obvious now it's AI entertainment, AI videos, AI movies are just going to replace humans making movies. The Netflix of today still requires
and that's
plots, people writing,
agreed.
Actors,
have you seen Coca-Cola's new Christmas commercial where they used AI to do the whole thing?
Oh, there you go.
But I guess that's the obvious thing. I'm trying to say what's the other thing that we're not even thinking about that's going to change the world?
The Sora AI, which is OpenAI's video model that you can create videos with, is absolutely insane. And you have videos just going viral all over the place, which is just AI created on Sora and on Grok.
And Mike was so excited because he got a Sora account and then he made that Rockstar anthem where he just
that's Suno.ai.
Oh, that's Suno.
Yeah,
Right.
Sora's video.
Sorry, I can't even keep track.
This is to make music. Yeah.
Shit, I can't even keep track. Suno, where he put in like the words debasement, student rentals, Rockstar, told it about like Rockstar real estate, and then it made an anthem for us and it incorporated all those words.
And it sounded incredible.
It sounded incredible.
And it was like 1 minute's work.
In 1 minute work.
Yeah.
And we're going to play it the next
these are like high. Yeah,
we're replacing like AC/DC Thunderstruck with our own theme song.
It's like high level musician performance.
We should actually make another one. We got to incorporate a whole bunch of words.
Yeah.
I hope
Take a photo of this sign.
Got to
Right
get Bitcoin in there.
There's some graphics like the rise of AI generated content, and it's like the views on TikTok. I think this is over the past. I don't know what the time frame is here. Over the past year, it looks like, and it was like 100% humans, 100% AI. And now it's like 50-50 from AI created content to human created content.
Holy smokes.
And there'll still be demand for like human created content.
We all need a safe
A
word.
lot of it's going to come.
When Aidan texts me, I'm like, Aidan, what's our safe word here?
Yeah.
Is this really you?
Yeah.
All right. Thanks, gents. Pleasure talking to you.
Cool. Sounds good.
Let's get back to tracking the Leafs, important stuff.
Go Leafs go.